Hey everyone, welcome back. The stock market is absolutely on fire right now. The S&P 500 and the QQQ are both hitting all-time highs. We've got bulls like Tom Lee calling for even more upside, while the bears, like Michael Burry, have been proven wrong again and again. But listen, while it feels great, this is not the time to get greedy and chase every hot stock. The market is expensive, and you need to protect your gains. Today, I am sharing some high-quality stocks that have pulled back and now look like incredible bargains in this frothy market. First up, Meta Platforms. The stock is down about 11% recently because investors are spooked by their massive spending on AI. We're talking $72 billion this year alone. But whether Zuckerberg is front-loading costs to build a superintelligence or just boosting his core ad business, this looks a lot like the 2022 dip over metaverse fears. Trading at just 21 times earnings with a nearly 3% free cash flow yield, this could be a huge rebound story. Next, Salesforce. It's trading at 24 times earnings with a 5% free cash flow yield. It's growing revenue at a steady 8 to 10%, margins are expanding, and it's generating $13 billion in free cash flow. It's priced like a cheap cyclical company, but it's a software powerhouse with double-digit contract growth. Then there's Adobe, which is even cheaper. It's at a 14.5 price-to-earnings ratio with a nearly 7% free cash flow yield. This company is still growing, revenue 10 to 12%, and its free cash flow is set to hit almost $10 billion. They're ramping up stock buybacks, and the fundamentals are just screaming buy. Let's talk financials. S&P Global is flat for the year but has been consistently crushing expectations on revenue, earnings, and cash flow, even raising its guidance. As interest rates eventually fall, it's got major tailwinds. Another one is Equifax, down 15% this year despite beating guidance every quarter. As rates drop and more people take out loans and mortgages, Equifax is perfectly positioned to benefit. It's a seriously undervalued gem. And of course, Netflix. The stock has pulled back, but it is still looking at 15% revenue growth and a 26% jump in free cash flow next year, hitting $9 billion. With the final season of Stranger Things on the way and a path to 50% operating margins by 2031, there's a lot of growth left. Speaking of growth, look at Uber. CEO Dara Khosrowshahi just reported 22% growth in trips and a 33% jump in EBIT. They're expanding into massive grocery and retail markets, gaining share with that simple push-of-a-button convenience. The stock is up big this year for a reason. Finally, a little tech drama. Amazon is suing the AI startup Perplexity for scraping its site with a browser tool called Comet. Perplexity is crying foul, but they're being hypocritical. Their own terms of service ban bots. Innovation is great, but it has to respect the rules. Amazon has every right to protect its user experience.